stock check or a chart check for Divi's lab, because it's been on the boil for the last few sessions. One of the few pharma stocks which has done really well. It's a steady up move, not that gung-ho kind of a move that we've seen maybe in a Strides Arco lab, but from those 930, 940 levels all the way to 1034 in a matter of a few days, and a few bullish reports that have come out as well. We thought to get the most bullish view on the street that we've seen till now on Divi's, and that is from Ventura. Vinit Bolinjkar, Head of Research at Ventura, joins us right now to speak about the report that they have come out. When the price was 952, their target price on Divi's lab is 1287, so almost $1,300 out there. Vinit, thanks so much for taking the time out and joining us.
Thanks for having me.
1287, that's a substantial uptick, almost a 30% uptick, or over 30% if you consider the price at which you recommended. Why do you like it so much?
Not really, if you consider the fact that you're seeing the EPS grow from 40 rupees to around 62 over the next couple of years. So over an 18-month time frame, a 35% rise in the stock, which has got one of the most exemplary EBITDA margins, upwards of 37%, which are even better than the net margins of any other company. And this is after the fact that you price in a tax rate which is going to almost double, given the fact that SEZ tax structure has changed. So from where he was paying around less than 10% tax, he is now going to go to 23% tax. So what actually I like about this particular stock is the fact that there is an equal balance of your generic API business and the CRAMS business. So the generic API, which is growing, is expected to grow about 19.5% over the next 2 years to over 1,300 crores from the current 996 crores. And what is the good fact about this generic API portfolio is that it is a matured or a ripened portfolio where the price erosion in the generics has already happened, and he's got significant market share, 70% in the existing segment. So that will really drive the stock. Okay, and when you come to the CRAMS business, there we expect to grow at 25%, with a patent cliff of $40 billion and having relationships with the top 25 innovators in the world, he stands in good stead. In fact, he is the best placed in the custom synthesis business. Apart from this, there are about 4 to 5 products which represent a market potential about 8.7 billion, which are awaiting US FDA regulation. The moment these FDA regulations come in, they are likely to come in the second half.
Is that a trigger over and above your current assumptions?
Yes, we haven't factored that into our assumptions, knowing very well how the US FDA is. You don't have timelines on that.
Sure.
So if that comes in, the market there'll be another trigger for the stock. So keeping these 3 things in mind, he's also doing a 400 crore capex. And in spite of the capex, he's generating positive cash flows. They're debt free. On the forex side, they do all the common sense things, nothing exotic. And if you compare the net margins of similar companies like Jubilant or Nicholas or even Biocon, who are into the synthesis space, he far outranks them. So keeping all these things in mind, TV seems very attractive. At 21p, you'll find it stretched.
Sure.
But it's right now available FI 14, 15p, and with, as I mentioned, the strong riders,
sure,
it's a relatively a safe buy.
Right. The stock is also institutionally held. FI and domestic institutions hold a fair bit of the stock.
Yeah.
Do you see an extension there in terms of the limit being hiked so that there's more fund infusion into?
Yeah, there's a possibility that the extensions could come in, and that would be a further trigger. But I am not the one who focuses on these market technicals. The fundamentals of the company are so intrinsically sound that it's a compelling buy at these levels.
The other bit is, do your assumptions in any way include the currency being placed at a particular level? Because 93% of export revenues, the currency would definitely have an impact on the bottom line.
Yeah, so no, we haven't factored in the currency revenues. Okay, in fact, in my opinion, the upside could be as much as 150 to 200 bips more if you take the currency into consideration.
Okay.
So we have been very conservative estimate. We have kept the currency estimates around $53 to the dollar.
Okay. What about the different a couple of other triggers? So my analyst tells me that the DS and SEZ approvals, international approvals, and once that happens, there'll be an additional contribution to the top line and the bottom line as well. Is that a really big trigger, and what's your sense of when is it likely to come by?
Again, as I mentioned earlier, US FDA is a tough call to take, but as far as our interactions with the company and whatever con calls we've had, the company expects these to come through in the second half. And as I mentioned, it's a 8.7 billion market opportunity. So it will be over and above what the company is generating, and it's a significant upside to our revenues. So if this were to come in, you could see the revenues of FY13 go up from what we have forecasted on 2,900 crores. It could be as high as 3,500 crores.
What are the risks to this, Vinit? I mean, are there any, you're talking about all positives for Divi's, everything seems to be in the right place. Surely something is a worry.
See, in my opinion, the worry would be appreciating rupee, but then it would affect all pharma companies.
Sure.
Apart from this, the fact that they are linked in with the different companies on the innovator side. As I mentioned earlier, the $1 billion pharma cliff which is there relatively insulates the company. They work in tandem with the innovators, and they work across the lifespan of the product. So in the CCS space, they're considerably well insulated, and the generic API, as I mentioned, is a ripened portfolio. So I do not see any kind of negatives coming out there.
All right, Vinit, we leave it at that. Thanks very much.
Thanks for having me once again.
Joining us and giving us that perspective. Divi's Labs Ventura's target for the stock is 1287, a 30% upside nearly from the current levels, 1034. This one has been a rank outperformer from the pharma space, and also purely in terms of the kind of institutional interest the stock commands, both foreign institutions and domestic institutions. A stock to clearly focus on at this juncture. Prakash is still with us, so just let's get in his recommendations as well before we wrap up the show. Prakash, what would you be recommending in this market?
Well, I like central bank